All right. Okay. Good evening, everybody. First of all, thank you for tuning in to our webinar tonight. So, before we start, let me do a quick mic test first. So, if you can hear me properly and clearly, can you say hi to me in the chat box, or just type hi to me? All right. Hi, Ori. Thank you. Hi, Doreen. Thank you. Okay, we'll start our webinar at 8 p.m. sharp. So we'll wait for more people to come in first. Then we'll start at 8 p.m. sharp on today's topic lah. Okay, let's wait for a while. All right. Later on during the webinar, right, we do have one Q&A session at the end of the webinar. You guys can actually put down your questions in the Q&A tab under your screen. So you can tap on that, then type out the questions that you would like to ask our speaker today. Then during the Q&A session, we'll be answering all the questions. All right. We still have 2 minutes left. Let's wait for more people to come in, then we'll start our session. All right, we shall start our webinar. Okay, today's topic will be catching the rebound in the bear market. All right, so as we know, in 2022, we have a lot of major events happening around the world, which have greatly affected the stock market, such as like the Ukraine and Russia conflict, like China's zero COVID-19 policy, and with the inflation at its peak, and Fed continue to raise the interest rate, and it's not showing any sign of stopping. So we have seen that 2022 is actually a bearish market. So actually, I know a lot of you are actually asking, like, is this the right time to cash the rebound, right? So, or will this be an opportunity to enter the market? So I'll leave this question to our speaker of the day today to give you more insight about this matter. But the let me do a quick introduction of our speaker today first. So the speaker for today is Dan Chang, the trading representative from PhillipCapital. So a little bit of background for Dan. So Dan is a trading representative with more than 21 years of experience in equity investment, and then is well equipped with a good understanding of market mechanism and the technical know-how to assist investors and traders to navigate some turbulent markets. Okay, so we'll hear more from Dan later. So before we move into our webinar session today, just to introduce you guys that we have just formed a new Telegram group, which is called the Stock Market Buddies, where we will be discussing some of these interesting news and some interesting insights about stock markets in this particular Telegram group. And we have some very prominent investors and traders are inside. Like Dan himself will be in the Telegram group sharing some of his insights daily. So if you guys are interested, take out your phone and scan on the QR code on the screen. So you can join the Telegram group, and let's discuss about stock insight. All right. Without further ado, we will welcome our speakers to come out to share about the title today. All right. Dan, are you ready?
Hey, hi, Bernard. Thank you.
Hi, Dan. All
Yeah,
right,
hi.
so I'll pass the floor to you.
Sure, no problem. Okay, hello everyone. Okay, let me share my screen first. Okay. Okay, hello everyone. Can you all see the screen? I think so, right? Okay. Good evening, everyone. So, this is Dan. I hope every one of you have already have your dinner because this webinar is going to last you about 9:30 p.m. Okay, so it's not going to be a short one. Okay, and okay, first of all, I would like to thank Investing Note for having me here in this webinar, and I would also like to thank everyone to take the time out to spend this evening with me. I really hope that through this webinar, I'll be able to bring some value to you guys and much more going forward. Okay, so without further ado, let's start. Okay, before we start, right, I think we need to understand the topic subject today, okay? Catching the rebound in a bear market, okay? Which means that we are actually in a bear market now, okay? So we won't be seeing a lot of uptrending chart. We won't be seeing a lot of positive news going, like those stocks where they went up like 10, 20%. No, we are unlikely to see that lah, okay, because we are currently in a bear market. So the purpose of this webinar, right, is actually to share on how we can navigate through this bear market and hopefully position ourselves to catch a rebound when the market trends up again. Okay, so this is not a buy today, sell tomorrow, get rich fast kind of webinar. Okay, so it's more of about navigating the market and catching the rebound if there's any. Okay. Okay, so I think just now Bernard have shared some of my background, so I don't want to spend too much time on my own background. So I just want to let you guys know a few things. So I'm actually a verified professional in this investing node. So I'm quite active at this active trader club. Okay, so I post almost daily in this active trader club. So if you have not joined this club yet, please feel free to join. Membership is free, and the investing node admin will approve the membership. Okay, so I understand that many of the attendees today are actually our friends from Malaysia. So if you are looking to invest in Singapore market and looking to open an account in Singapore, of course you would like to have a legitimate broker or someone who you can trust with. Okay, so personally, right, I'm a verified professional by Investing Node. So I'm real, I'm not a scammer here. Okay, and you can actually PM me or even find me at this active trader club. Okay, I'll be there almost every day. Okay, for those who have some private matters that who want to PM me, you can take out your handphone now and scan the QR code on the bottom right hand side to add my contact into your phone. Okay, so I will not waste too much time here, so you can find out more about me here. And if you are on LinkedIn, feel free to link out me. Okay, so without further ado, right, some disclaimer first. So this webinar is more for educational and sharing purposes. Okay, it's not meant to constitute as a buy or sell recommendation of any stock or whatsoever. Okay, so the view expressed in this webinar are purely my own opinion, and hopefully they will be helpful to you guys. Okay. Okay, before we actually dive into the Singapore market, right, we have to see what is happening around us. Okay, so I think Bernard just now has mentioned quite a bit here. So these 2 years, right, in starting from 2020, we have this COVID-19 pandemic where we see a lot of border closing, a lot of quarantine, a lot of lockdown that have disrupt a lot of economy, okay, whether it's Singapore, US, Hong Kong, Malaysia, Thailand, or even Japan, okay. And fast forward to 2022, right, actually we are already moving out of the pandemic already. However, bad news seems to follow one after another lah. Okay, so as we are moving out of pandemic, uh, we are facing another headwinds. Okay, like the supply chain disruption that is caused by Ukraine and Russia. Okay, which I will elaborate later more on it later on. Of course, we also have this China zero COVID-19 policy, where we see the China government cramping down again. Okay, locking down towns, locking down cities. Okay, worker cannot go to office to cannot go to factory to work. You know, supplier cannot push their goods out. You know, ships are being docked at the shipyard, not being able to deliver their products, kind of thing. So, supply chain disruption is real. Okay, and more recently, right, we are also reading a lot of news on inflation and rate hikes. Okay, actually, right, inflation has been around since last year. There is already a talk of inflations. Okay, but this year it was really expedited a lot. Okay, so this is also the year where the Federal Reserve decided to hike rate. Okay, starting from the March Fed meeting. Okay, so beside this inflation rate high supply chain, right, we also see a heightening in this US-China tension. Okay, actually this US-China tension, right, the seed is being sowed during Donald Trump's era. Okay, but it wasn't until this year 2022 where we see them being escalated. Okay, I will go on to that later. Okay, in my other slides. Okay. So with so many headwinds facing in 2022, okay, the global market, including Singapore, has not been performing very well. Okay, you can look at this four chart, right? This is actually the chart of year to date of S&P 500, Hang Seng, Shanghai, and STI. Okay, so this black line here are all the start of the year. So you can see that year to date, right? Almost every index is down. Okay, S&P is down, Hang Seng is down, Shanghai is down. Okay, if you pull out the chart of Dow Jones, Nasdaq, even I think for Malaysia, KIC, the index is also down. Our STI is also, Singapore is also down. Okay, but if you look closely, right? Okay, actually our market already at this STI, this index is not so bad. Okay, if you look closely, we are actually down by a bit only. Okay, this chart is actually updated yesterday night. Okay, so as you can see, right, this is yesterday, Wednesday, Tuesday, Monday. So you see that actually before this week, right, STI is actually making a gain year to date. So it's only this week where we came down that we see a year to date loss. Okay, but comparatively speaking, right, we are actually much better off than the global market, the regional market. Okay, the media will always use outperform to describe STI. Okay, well, outperform is not the wrong word. I would prefer to use the word resilient. Okay, so as you can see from here, right, everybody is down. Okay, but STI, relatively speaking, is holding up quite well. Okay, it's holding up better than most of the indices in the global market. Okay, and let's zoom in on what happened to STI in the year 2022. Okay, so like the global economy, okay, we are moving out of the pandemic. Okay, so we see this is at the tail end of 2021, we see that we are actually moving up. Okay, until Omicron strike. Okay, by Omicron strike, there is a fear that the pandemic may drag further, and we see a drop of the indexes towards the November-December period. But Omicron is actually the last few COVID variant that has really impact the health of human being lah. So the impact, because it's mutate already, so as it's mutate, right, the severity of this Omicron variant is not so serious. Okay, so our market actually, or rather the global market has actually recovered very fast, and STI has recovered as well. Okay, so at the start of the year, the turn of the year 2022, okay, everyone, including Singapore, we are moving out of the pandemic. Okay, so I mean, at that point in time, people are thinking that, oh, it's rosy time. Okay, So it's going to go up until in February. I still remember the date, 24th of February, when our dear Russian President, Mr. Putin, decided to invade Ukraine. Okay. This came as, I would say, came as quite a surprise because in modern times, right, is not very often that we see countries using military strength to solve their problem, especially a country as big as Russia. But anyway, it happens lah. Okay, so as the war broke out, right? Okay, our market, along with the global market, dropped very sharply. Okay, all the way to back to where we are at the start of the year. Okay, then if you guys remember, right, sometime in March, there were talks that these Ukraine President Zelensky and Putin, they are scheduled to have some peace talk. Okay, so the market rebounded, okay, in the hope that there is optimism of a swift resolution to the war. Okay, but what happened was that even before the war was over, right, we are hit with another bad news, or rather with another adverse event. Okay, it's bad things, one thing followed by another. So the Fed Reserve decided to hike their rates, okay, in their March meeting. At that point in time, right, it was only a 25 basis point rate hike, okay, and subsequently it became a 75 basis point rate hike, and the market tumbled all the way down to the consolidation zone where we are at the end of 2021. Okay, and just at this point, right, market was thinking that, oh, okay, since the market has dropped so much already, okay, maybe most of the inflation impact has already been factored into the price movement. Okay, and then therefore our market has been moving sideways since. Okay, then came our this quarterly earnings season. It was this quarterly earnings season where we see another surge again, another rebound here. Okay, why? Okay, because a lot of company is actually announcing a better result this time around. Yeah, I mean, now it's 2022 compared to 2021 and 2020 when the pandemic was at their peak. The result on a year-to-year basis is obviously better. Okay, and at that point in time, right, because inflation fears has already been priced into the market, most of the company that release their quarterly earning, right, they actually give quite a good outlook. Okay, so the market rebounded. Okay, but as we all know, right, earnings season only like 1 or 1.5 months only. Okay, so after the earnings season, market start to consolidate between these 3002 and 3003 level. Okay, and it wasn't until these US inflation data, sorry, it wasn't until this US inflation data that came out about 2-3 weeks ago, where there is a resurgence of this inflation fear again. Okay, because the inflation data actually point to a much severe situation that what is expected. Okay, and follow that, right, 1 week later, the Federal Reserve have actually hiked the rate again, the third consecutive 75 basis point rate hike, and from then on, we have been seeing the market dropping all the way for the past 1 week or so long. Okay, so this one, I think this one is updated just a few hours ago. So you can see this one is Thursday, Wednesday, Tuesday, Monday. So actually last week wasn't too bad. It's just that after the Fed meeting is somewhere around here. Okay, after the third consecutive 75 basis point, the market just tumbled. Okay, if you have, I don't have this S&P chart with me here, but if you look at S&P or even Hang Seng or Hong Kong, you will see that the drop is even more severe than this. Okay, so you may be asking, hey, then since STI is also dropping, why do we invest? Why do we want to look at Singapore market at all? Okay, as I mentioned at the start of this webinar, right? First thing first, the topic today is catching a rebound in a bear market. Okay, so we are in a bear market. Okay, no chart will look good at this point in time. Okay, almost every single chart, I would say maybe 99% or 98% of whatever chart that you pull out is going to be bad. Okay, so that's number one. Number two, Just now I've already shown that actually our market is more resilient than the global market in general. Okay, in general. Okay, our drop is not that drastic. In fact, before this week, we are actually having a year-to-date gain. Okay, it's only this week where we start to see a loss. But even the loss is very minimal relative to all the other index. Okay, and why is this so? Okay, I have to admit that actually Singapore market is a very, very small market. Okay, so we are, sorry, yeah. Okay, as I was saying, Singapore market is a very, very small market. Okay, and the government, the Singapore government actually play a very important part in our market. Okay, so going back to 2020 when the pandemic struck, right? A lot of countries have been going into border lockdown, quarantine, okay, and lockdown of cities and towns and kind of thing. Okay, so in the Western world, like the US and Europe, we have seen a lot of protests, okay, against all these measures, okay, all these safety measures, all these COVID-19 measures. Okay, we see a lot of protests there. Okay, then over at the other side in China, we see a lot of people complaining that China is very strict in locking down. Like for example, if you are eating in a restaurant and the restaurant, some people in that building where the restaurant is being situated is having a COVID-19 syndrome, the whole building will be locked down. Okay, so you have to stay in the building for the next 3 to 7 days. Okay, so as we can see, right, different countries deal with the pandemic differently. But in Singapore, right, okay, the Singapore government actually handled the pandemic in a very systematic, in a very measured way. Okay, I'm not saying that the Singapore government is doing a very good job. Okay, in fact, there are still some grumble here, some protest there. Okay, but what I'm saying is that how the Singapore government handled the pandemic is deemed as acceptable by the population in Singapore. Okay, so we have a very measured approach to transit from this pandemic, to contain this pandemic, and thereafter, from this pandemic, transform to an endemic. Okay, then on the economic side, right? Okay, the economic side, the Singapore government has also give out a lot of goodies. No, I wouldn't say goodies lah. Actually, I would say support lah. Okay, so they have run a lot of scheme to support businesses. Okay, like for example, they have this job support scheme where they help to pay, help the employer to pay part of the employee salary. Okay, and they also have some tax incentive to landlord, for the landlord to give rental rebate to the tenant. Okay, and even the self-employed, right, they are not being forgotten. I mean, our taxi driver, our Grab driver, our property agent, our insurance agent. Okay, so if you fit the criteria, right, there's also a handout of up to about $9,000. Okay, if you fit the criteria. So in a nutshell, right, the government is doing a very good job in supporting the economy. Okay, and fast forward to 2022, now that we are moving out of this pandemic is no longer the so-called the most important thing to look out for lah, because now we have inflation and everything. Okay, now that we have been coming out of this pandemic, we have seen a lot of relaxation in border restriction, the safety distance measuring, and the mask wearing. Okay, in fact, from last month onwards, other than healthcare institution and public transport, mask wearing is actually optional in most places lah. Okay, and in this year, right, 2022, right, inflation has been the buzzword lah, so to speak. Okay, the buzzword, and the Singapore government has also been proactively managing the impact that inflation have on Singapore economy. Okay, so actually as early as this the earlier part of 2022, actually the MAS, Monetary Authority of Singapore, which is the central bank of Singapore, okay, has already strengthened the Singapore dollar once already, and it was during an off cycle. Okay, and the latest one, right, 1st of August here, as you can see, right, 1st of August, the MAS has strengthened the US under the Singapore dollar again. Okay, so different country use different monetary policy to support the economy lah. Okay, for Singapore, right, we don't use interest rate. Okay, we use the foreign exchange rate. Why? Because Singapore is a very small and open economy, so most of our products, right, is mostly imported. Okay, so by strengthening the US dollar, by strengthening the Sing dollar, right? I don't know why I keep saying US dollar. Okay, anyway, by strengthening the Sing dollar, right? Okay, it actually bring down the cost of imported goods. So we import things like chicken, like duck, like poultry, like pork, like basic necessity. Okay, most of these things are being imported. So by having a stronger Sing dollar, this import is actually will become cheaper to come in, so that it make it more affordable for people in Singapore to purchase them. Okay, so this is one way where the Singapore government has been trying to proactively manage and support the economy. Okay, so and it's because of this proactive management, that's why the Singapore economy in general is more resilient, as I've shown earlier, than most of the global economy. Okay, so okay, after talking about all these macro and all this economic, right? Let's zoom into the STI component. Okay, I have been mentioning STI, STI, STI. Okay, so what is STI? STI is actually called the Straits Times Index. Okay, so it is an index that track the 30 biggest company in Singapore by market cap. Okay, so there are a few familiar names here which a lot of people might have known. DBS, UOB, CapitaLand, Genting Singapore, maybe SGX. Okay, so these are some of the familiar names that you might have heard in our region. Okay, then of course there are two things to note in this STI index. Okay, firstly, the four biggest component, right, already make up 40%. Okay, already make up 40% weightage of the STI. Okay, so DBS, OCBC, UOB, the banks, together with Singtel, the national telco, already make up 40%. Okay, the second thing that I may want you all to take note is that there is quite a few REITs in our STI as well. Okay, let's look at it. You see, we have this Capital Integrated Commercial Trust. Okay, one. We have this Mapletree Pan Asia Com Trust. Okay, we have these Ascenders REIT. Okay, we have this Mapletree Logistic. We have this Mapletree Industry. We have this Fraser Logistic and Commercial Trust, and we also have these Kappa DC REIT. Okay, so altogether there are 7 REITs on the STI index, and all these 7, right, add together is about 13%, 13% of the weightage of STI. Okay, maybe you ask, why so many Mapletree here? Okay, actually Mapletree is a wholly owned subsidiary of the Temasek. So there's the Singapore government investment arm lah. Okay, so as you can see, right, a lot of these companies are all GLC, government linked corporation. Okay. Okay, so there are so many companies besides this index, this 30 company on the STI index. There are a lot of other companies as well. Okay, so there are so many companies here. So which one should we choose? Okay, what are some of the potential stock that we can look at to position ourselves when the market rebound? Okay, because now bear market, so everything is dropping. Okay, so what are some of the stock that we can actually take a look at? Okay, so things to note before I continue. Okay, different investors trade differently, invest differently. Okay, different investors have a different investment objective. They have different investment style. They have different investment horizon. Okay, and they have even like short-term trading or long-term holding kind of thing. So every one of us is different. So it is very important for me to set this clear, is that I want to give you guys, to share with you guys the angle that I'm looking at. Okay, the angle, so that you all know where I'm coming from. Okay, so the following 3 stocks that I'm going to show to you guys, right? I'm taking it from a perspective of number one, fundamentally strong. Okay, because we are in a pandemic. Okay, so the company need to withstand whatever headwinds we have in 2022 and beyond. Okay, so we need to be fundamentally strong and hopefully defensive against macro event. Okay, so this is one criteria. Okay, the second thing that I want to put across is that I also look at these stocks from a news-driven perspective. Okay, what is news-driven perspective? Okay, there are people who use solely on chart to trade, to invest. There are also people who use fundamentals like all the financials, the top line, bottom line to make their investment decision. Okay, for me, right, I'm using a news-driven kind of perspective, okay, to pick up these three counter. What is news-driven? Meaning that I'm looking at what they have been doing recently, or what they have been announcing in recent time, and from there we gather what are the potential catalysts that can bring this company to the next level. Okay, so it's mainly news driven. Okay, of course I also use a bit of chart, and I will touch on a bit on the financials as well, which I will show to you later on the individual stocks. Okay, so to catch a rebound in a bear market, right? Obviously, the investment horizon will not be short term lah. You will not be like buy today, sell next week, kind of thing and make money. No, it will not be. Okay, so the investment horizon is actually mid to long term lah. Okay, as long as we move out of this when we move out of this bear market. Okay, so let's touch on the first company that I want to share. Okay, Singtel. Okay, Singtel is actually what I will call the national telco. Okay, why do I say that? So it is basically like it's majority owned by Temasek, which is the Singapore government's investment arm. Okay, it's something like Telkom Malaysia in Malaysia lah. So it's so called the national carrier lah, the national telco carrier. Okay, and they start listed on November 1993, but since then, right, they have been branching out. Okay, they are already the biggest telco company in Singapore, and they are among the top, if I'm not wrong, the top 5 or the top 7 in Southeast Asia. Okay, so they are actually quite established in this telco area, this mobile area. So they have been over the years, right, over the last 3 decades, they have been branching out, and they have increased their stake, or then buying a stake into a lot of regional company. Okay, I will touch on that later, but mainly telcos in Thailand, in India, in Australia, Philippines, and Indonesia. Okay, all the regional telco. And other than just being a mobile operator, right, they have also other businesses like internet provider. Okay, and other things like 5G and digital banking, which I will also touch on it later. Okay, so Singtel is I would say it's one of the biggest company in Singapore lah, by market cap. In fact, during the pandemic, when the bank share price dropped a lot, they are actually the biggest company by market cap in Singapore. Okay, but because now all the banks has been coming up and they have overtaken Singtel, so Singtel is actually the 4th biggest company by market cap in Singapore. Okay, on the STI. Okay, so why Singtel? Okay, remember just now I shared with you guys on this thing, on this the angle that I'm coming from. Okay, so I'm looking for a company that is fundamentally strong, that is defensive against macro environment. Okay, and companies that have potential catalysts for it to push forward. Okay, and in my opinion, right, Singtel is one of them. Okay, so there are a few points here. Let me go through one by one with you guys. Okay, first of all, Singtel is a big cap government infrastructure stock. Okay, it is 52.5% Temasek owned as at 3rd of June 2021. Okay, and this Singtel, or rather this Singapore government, is likely to hold on to this majority stake in Singtel because sometimes it's about national security. Okay, so you need something that always remain as a Singaporean, so that the national security will not be leaked lah. So Singapore government mainly they use Singtel network for either for their internet, or even mobile or whatnot lah. Okay, all the telecommunication. So they are unlikely. Okay, they are unlikely. The market is unlikely to sell any stake on them. Okay, so they are actually a government infrastructure stock. Okay, then this fact sheet is actually taken from March 2022, quite recently. Okay, so as you can see, right, they have actually other than being number one in Singapore, okay, they have actually a lot of stakes in other regional country as well. Okay, so the most prominent one I would like to point out is Optus. Okay, it's 100% owned. Okay, and Optus is currently the number 2 in Australia. Okay, another prominent company is this Bharti Airtel, which is also number 2 in India. Okay,
Then,
yeah.
so sorry for interrupting. Yeah, there's an audience saying that voice a bit soft.
Oh, the voice is a bit soft lah. Okay, give
Yeah,
me a minute.
alright.
Is it better now?
Yes, I think it's better.
Okay, maybe I just hold on to the mic.
Right.
Okay, thank you. Okay, so as I was saying, right, so the other than Optus, Singtel has a very big a very big presence in the region. Okay, and the more prominent one besides Optus in Australia is also Bharti Airtel in India. Okay, so Bharti Airtel is actually a number 2 in India. Okay, Bharti Airtel actually, to be frank, right, about 2 years back, 1-2 years, they run into some trouble. Okay, some trouble with some of the things lah. But this year, right, they have actually become a major contributor to Singtel's bottom line. Okay, then other than these Bharti Airtel and Optus, okay, Singtel also has stake in some of the telcos in Thailand, Philippines, and Indonesia. Okay, and one fun fact that you guys may want to know that because Singtel is already so big in Singapore, so they have been putting a lot of effort on their overseas operation. And till date, right, as of March 2022, almost 80% of Singtel's underlying profit is derived from their overseas operation. Okay, is derived from there lah. So as you can see, right, Singtel is actually very stable, very strong fundamentally. Okay, and I think it is very defensive in nature lah. Okay. Just now I mentioned that the angle I'm taking in terms of picking up all these stocks, right, is number 1, fundamentally strong. Number 2, news-driven event that can bring about potential catalysts going forward. Okay, so Singtel is actually having a lot of potential catalysts going forward. Okay, and one of them is that they are one of the 2 5G licensee in Singapore. Okay, so back in April 2020, right, they are actually one of the 2 company that was awarded the license to operate 5G network in Singapore. Okay, so to roll out, so their role is actually to roll out 5G standalone network by 2021. Okay, provide coverage for at least half of the Singapore by end of 2022, and complete nationwide deployment by 2025. Okay, so these are the news on them getting these 5G license. As you can see, Singtel is one of them. The other one is StarHub and M1 joint venture. For context, right, StarHub and M1 is actually the 2nd and 3rd largest telco in Singapore. Okay, so these are the 2 companies that are being awarded the 5G license to date. Okay, so since Singtel got this 5G network license, right, they have been progressing in leap and bounds. Okay, so you see on 24th of June, right, they start to usher into this 5G era. At that point in time, 5G was still not so popular, but now it's almost like Singapore everywhere is 5G. Okay, so fast forward, right, to July 2022, Singtel has already the 5G network has already surpassed 95% of the nationwide coverage already. Okay, remember the previous slide, they are supposed to hit a target of 50% by end of 2022 and nationwide by 2025. But now we are not even at end of 2022. Singtel have already surpassed 95% nationwide coverage. Okay, so with this 5G network, right, you can actually see that, first of all, Singtel have a first mover advantage. Second, they have a high barrier to entry. Okay, because they are only one of the two licensee. Okay, and comparing them with the other licensee, which is a joint venture between StarHub and M1, they are actually the bigger one. Okay, of course, we also have some smaller telco like TPG in Singapore. Okay, but they if they want to use 5G, they have to tap onto either Singtel or StarHub M1 network. Okay, they cannot have their own network today lah. Okay, the second potential catalyst that Singtel can potentially enjoy is that they have been awarded a digital bank license as well. Okay, together with Grab, I think Grab shouldn't be too foreign to you guys. Okay, so together with Grab, they form a consortium called GXS. Okay, to apply for a digital banking license back in 2020. Okay, and they are being awarded the digital full banking license, which means that they are allowed to offer financial products to customer through digital platform. Okay, and they can serve retail and corporate banking services. Okay, this is actually very big. Okay, because as we all know, right, traditional banking has been around for so many years already, and now we are all talking about disrupting. Okay, the disruption, technology disruptors, 5G disruptor. Now we also have this digital banking disruptor. Okay, so digital banking is set to disrupt the traditional banking sector. Okay, to bring on more convenience. Okay, more accessibility to banking to all the retail customer. Okay, so Singtel is one of the licensee for this digital banking. So as you can see, on the 4th of December 2020, they are only one of the two that got this digital full banking license. Okay, the other one is actually an entity wholly owned by C Limited. Okay, C Limited is actually the owner of Garena and Shopee. If you all do online shopping, you all should know about Shopee. Okay, but Shopee is not doing very well now. Actually, later I also have a slide on C as well lah. So you will know why I would say in terms of digital banking license, right? Out of these two, these GXS, okay, the consortium between Singtel and Grab is having an advantage over the one that is being provided by C. Okay, actually subsequently, right, MAS also award a few more digital banking license to other player lah, but that is actually at the later date. Okay, and fast forward to this year. Okay, Grab Singapore, which is GXS, the name is called GXS. They actually launched their digital saving bank account, okay, on the 5th of September this year. So it's just a few weeks ago. Okay, and they are actually the first digital bank to do so. Okay, where they are trying to gain a first mover advantage again. Okay, and they unveiled their first financial product is actually a GXS saving account. Okay, so unlike traditional bank saving account where you have to hit a minimum sum. Okay, these are digital GXS saving account that actually do not require a minimum sum to maintain. Okay, there are also some other factors that make it easier for retail investors or retail people to bank with them rather than traditional banking. Okay, and Singtel, right, or rather GXS, right, is not going to rest on their feet just because they gain a first mover advantage in this digital banking arena. Okay, in fact, earlier this year on the 29th of April, GXS actually joined hand with the richest man in Malaysia, or maybe one of the richest men in Malaysia, the Koch brother. Okay, I think his Chinese name is Guo Hongnian. Okay, together with the Koch brothers, they have actually also won the Malaysia digital banking license as well. okay, on the 29th of April. So do look out for their products, maybe in the months ahead or in the years ahead. So this is something that we can look out for Singtel. Okay, so they are actually they are not only having a first mover advantage, but they are also exploring new arena, okay, new I would say a new platform, okay, to grow their business. I mean, if you're talking about, let's say 5 years ago, okay, nobody would ever trust a digital banking or heard of digital banking before. Okay, so they are actually the always the first mover, okay, to leap onto a fast growing platform. Okay, so this is something for us to look out for lah. Okay, and the third thing is also a potential catalyst. Okay, and this one is very powerful. Okay, is asset monetization. Okay, for the benefit of those who are not aware, asset monetization means that, like for example, Singtel have last time they bought a lot of infrastructure asset. Okay, maybe at this year at this point in time, they are no longer the core business, and they have already appreciated in value. So what Singtel can consider is to sell these asset, all these infrastructure assets, okay, and monetize it, okay, to get back the funds, okay, and with the funds, right, they can either do a capital recycling, meaning putting the fund back into their business, to maybe a 5G or to a digital banking business, or they can also give out these funds as special dividend to shareholders. Okay, so this is also something that we can look out for Singtel. Okay. Okay, actually, back in 2021 May, okay, Singtel has already have this plan already. So it's not like a spur of the moment. Okay, they have already been planning 1 year before. Okay, so what happened was that just now I mentioned, right, for donkey years, for decades, Singtel has already become the biggest telco in Singapore. They have become the top 5 or top 7 biggest telco in the region. Okay, so they find that, you know, they are already at the pinnacle of what they are doing already. Okay, so they need to set a new strategic direction for the company to go forward, okay, to up another level, okay, so to speak, to level up lah. Okay, so back in May 27, 2021, Singtel have actually set a new strategic direction to capture growth and unlock value. Okay, so this is what I've been just now I've been saying. Okay, so they actually seek to unlock the value of some of their assets which are non-core to them, or which they think that is no longer relevant in this era. Okay, so this is what we call asset monetization. Okay, and Singtel will walk the talk. Okay, it's not just all talk only. Okay, they will walk the talk as well. Okay, so just this year alone, we see that actually Singtel has already done quite a few asset monetization. Okay, so in March, they have actually sold away a partial stake in these Airtel Africa as part of their capital recycling strategy. Okay, they raised a net proceed of about 150 million. Okay, this one is not a lot. It's quite small, actually 150 million. Okay, but just a few months later, right, in July, okay, they also announced that they have divested MOB for US 239 million. Okay, so this is slightly more than the Sing dollar 150 million. Okay, for context, right, MOB is actually advertising and digital media company. Okay, and it is actually to Singtel, right, they are considered a non-core business lah. Okay, they are considered non-core business. So Singtel is looking to divest them, okay, so that they can use the fund to sharpen their business focus and recycle the funds for better return. Okay, and that is not just that, you know. So just on a month later, right, exactly a month later, 25th of August, they divest away 3.3 direct stake in Airtel, Bharti Airtel. Okay, the India subsidiary that they have lah, and they in the midst of this divestment, they've actually unlocked a 2.25 billion Sing dollars out of these divestment. And out of these 2.25 billion, right, actually 0.6 billion are considered net gain. Okay, so the proceed raised from this 2.25 billion, right, will be used to fund 5G capex. Okay, capex is capital expenditure. Okay, so they are going to use this money to spend on the capital expenditure of all the their 5G business. Okay, because 5G business is forward looking. Okay, whereas telco, I'm not saying that it's not important, but you know, if in order to level up, right, they have to fund the more forward looking business, and they are only selling a 3.3% stake. Okay, so that they still hold a sizable stake in Airtel, and they are still holding on to telco business in the region like Singapore, Australia kind of thing. Okay, so they divest this partial divestment of this Airtel to fully fund this 5G business lah. Okay. Okay. Now having talked about the fundamentals, the strong fundamentals that Singtel have, and the potential catalyst that we can look forward to from Singtel, let's take a look at the financials. Okay, Singtel, the financials, there's nothing to crow about. Okay, it's not spectacular. Okay, but it's decent. Okay, as you can see, right, the bottom line here, net profit is actually up 43.4%. Okay, whereas there's actually a dip in revenue. So you might ask me, hey, 43.4% increase in net profit, and you're telling me that the result is only decent. Okay, why do I say that the result is not decent? Okay, because actually these net profit, right, up 40%, right, is actually part of it, or rather a major part of it, is actually from the exceptional gain, okay, from Airtel and the dilution of the group holding in this thing called Australia Tower Network. Okay, actually prior to just now, the three company that they do a divestment, right? Actually before that they also have some divestment going on now. It's just that I didn't put it in because it's like a few months, last year thing lah. So I just want to point out the more recent one. Okay, so the net profit was up mainly because of exceptional gain. Okay, so in terms of underlying net profit, right, they actually only increased by 11%. Okay, and why do the operating revenue and the EBITDA drop? Is because, as I mean, it's understandable. Once you sell away the MLB, the revenue MLB cannot be added into the revenue of Singtel. Okay, so there's a dip in revenue, which is understandable. Okay, but having said all this, right, I'm not saying that Singtel result is bad. Okay, and I'm just saying that Singtel result is decent. Okay, it's stable. Okay, in view of all the headwinds that we are facing in this 2022, they still managed to churn out a decent result. Okay, shows that they are actually fundamentally sound and strong. Okay. Okay, now let's take a look at these the chart of this Singtel. Okay, you can see that Singtel has, okay, actually Singtel last time they always call Singtel the boring stock. Why? Because they always range bound. Okay, however, there is a slight change in 2022. So what happened? Oh, sorry. So what happened was that in 2022, while the global market has been dropping, okay, Singtel has actually plot a gentle uptrend, okay, since I think since somewhere in the fourth Q of 2021. Okay, that was around the time where they start the new strategic direction. Remember just now the slide that I show you. Okay, so ever since, right, they have been going up, coming down. This one is the period where Omicron was happening. Okay, and overall they drop back, they go up again, and this year at 2022 we see a very high upsurge, because during this time there is a lot of news on all these divestment, capital recycling, and news on 5G and the digital banking. So that was the time where market moved ahead of all the news. Okay, so they moved up to a high of as high as about 2.85. Okay, before they came down again because of obviously the rate hike. Okay, that I think impact almost every company lah, because even big company also need to borrow money. You see, they also need bank borrowing. So interest rate, in one way or another, they will always be affected. Okay, but when they pull back, right? If you notice, okay, they are still above the year-to-date high. Okay, they are still above the year-to-date high, and after that, right, they have been going up and moving in a very nice uptrend. Okay, this uptrend was being created because we saw these we have these five, the just now I show you the digital banking license, the first product that was being launched, and obviously also the 5G licensing kind of thing. So there are a lot of divestment to fund all these 5G. So these are all incorporated during this period of time. So we see a major uptrend. Okay, I mean a gentle uptrend. Okay, so this is a time where we heard of these inflation data. Okay, and subsequently along with the global the broad market, they also dropped. In fact, the last 3 days, right, Monday, Wednesday, Thursday, they drop out of the uptrend channel. Okay, only to bounce it back just today. Okay, this chart actually I just updated about 1 hour ago. So I just updated 1 hour ago. So I add in this chart to show you that how resilient Singtel is. Okay, I'm not going to say how strong it is. I mean, how outperforming it is. I'm just saying that how resilient it is. Okay, so you can see that now they are back to this channel already. Okay, so going forward, right? Actually, I expect these rate hike, rate hike fear to persist for a while in the near term lah. So in a worst case scenario, not worst case scenario, I should say, in a bad scenario, right? It's not so good scenario, right? There is a chance that they might drop further. Okay, but we'll likely to see a support around this region 2.50. So this region is where we can consider to position ourselves to catch a rebound when the market recovers. Okay, so these are the region that we can actually take a look at lah. Okay. Okay, so let's move on to this second stock. Okay, the second stock I'm going to talk about is this SGX. Okay, Singapore Exchange. Okay, so SGX is actually our so-called national exchange, just like Bursa Malaysia. Bursa Exchange in Malaysia. Okay, so they are the one and only so-called national exchange where we trade our shares on. Okay, but there is a very interesting thing about this SGX is that they have actually a very big derivative market that is even bigger than the security market. Okay, so as you can see, right, they actually won a lot of awards back in those days, even in the 90s, and even up till now, right, their derivative business is comparable to their security, if not better. Okay, so SGX other than providing stock trading or equities, they are also very much into derivative as well. Okay, and I would like to say that SGX have a very turbulent past 2 years. Okay, past 1 year or so. Okay, unlike Singtel, right, they have faced a lot of things. Okay, I will go through one by one with you. Okay, so ever since the pandemic, right, back in early 2020, it's very funny. Okay, at the peak of pandemic, everyone is dropping. All the stocks are dropping. Okay, because pandemic, everything closed down, everything locked down. Okay, SGX is one of the very few stocks that actually jump up. Okay, they actually move up. In fact, they even report a 38% jump in quarterly net profit, and it was a 13-year high. Okay, why is that so? Okay, because pandemic, people are the market is very volatile. Okay, and SGX being an exchange, right, it doesn't matter whether the market goes up or come down. Okay, as long as the market is there's volatility, there's trading volume, they will earn their that's where they earn their revenue. Okay, so because of this COVID outbreak, okay, there's extreme market volatility in the market. Okay, and that has actually boosted both on the equity and the derivative trading volume. So trading volume actually hit a high during the pandemic, the peak of the pandemic at that time in 2020. Okay, so it was a boom time during the pandemic for SGX. But okay, the good times didn't last very long. They only last a few months. Okay. Although SGX is very defensive against these macro events. Okay. Unfortunately, they face some company specific news or some adverse company specific news. So what happened is that it was revealed that they have discontinue most of the product they have launched with these MSCI. Okay, so okay, just for context, right? A lot of on the derivative side, right? SGX actually have an agreement with MSCI to launch a lot of contracts, equity index futures, option contracts, and everything. Okay, but that year, right? They actually announced that they are not going to renew the contract. So without renewing the contract, right? It means that this product will no longer be available for investors already, for traders already. Okay, and what make it worse was that after this event, right? After MSCI and SGI decided not to renew the contract, MSCI actually signed a new contract with the Hang Seng Stock Exchange to launch a product that is very similar to SGX champion product China A50. Okay, so all this while, right, on the past 5 to 6 years, SGX on the derivative side, they have a champion product called China A50. So this is the only index at that point in time that track the 50 biggest company in China. Okay, so a lot of people are trading China A50. So at that point in time, during those 5 years, SGI has almost like a monopoly in that market, the China A50. But now that MSCI has signed contract with Hang Seng to introduce the same product to China A50, okay, there is a concern that there will be competition, okay, and there is going to be a big loss of revenue from this product. Why? I mean, it's China A50 right? Hong Kong is nearer to China. I mean, if I were a global player, right? Let's say a US trader, okay. If I want to trade China, obviously I will go to Hong Kong. Why would I go to Singapore? Right now, okay. So that is a very big a very big setback for SGX. So what happened was that after that expiry notice, right, SGX share price actually dropped to 2-month low. Take note, it's only 2 months low. It's not like a multi-year low. Why? Because before that, SGX actually went up. Okay, I'll show you the chart later. Okay, so after this thing happened, right? Same like Singtel, SGX, the CEO Lo Bun Chai has is already moving on already. Okay, so now that they have lost these they are decided not to renew a contract with MSCI, they have to do more other things to keep up the business. So they decided to go onto M&A deals, okay, to acquire other companies to drive their multi-asset strategy. Okay, so what they have done is that they have acquired 2 companies. One is called BitFX, the other called Scientific Data, which I will show you later. Okay, more on that later. So this is the chart to show what have happened in the last 2 years. Okay, so you see, during the breakout of the COVID-19 pandemic, right, SGX actually surge up. Okay, when all other stocks dropped to a new low, they actually surge up. Okay, at that point in time, it was also, I think, a year high lah. Okay, at that point in time, it was only until they announced about discontinue these MSCI equity index futures and option contract where we see them dropping back a lot. Okay, this drop is drastic. In fact, you see a gap down here. Okay, why? Because as I mentioned before, right, the revenue of SGX is very skewed towards that champion product China A50. Okay, so the competition is real. Okay, so there is a lot of fear. Okay, and SGX actually hit quite a low price. Okay, it's almost like $8. Okay, but luckily for them, okay, although this one is a company specific news, this one is more due to macro news. So as the pandemic still persists, right, okay, the trading volume on the equity side still remain high, okay, and during this time, right, SGX has also embarked on a few acquisition, okay, to set up a new strategic direction on their multi-asset strategy, okay, and we have seen the share price rebounded strongly, even above these MSCI thing, all the way go up, okay, but reality set in. You see, this is the time where the announcement came, okay, and this is the time where the contracts actually expire, okay, and this was the time where SGX seen a very pullback because they were concerned that these Hang Seng, these Hong Kong Stock Exchange launching this product that's similar to China A50 will have a very big impact on the top line of SGX. Okay, so the price dropped back again, okay, to consolidate around this range. Okay, so since then, right, since 2022, right, they have been trading sideways. Okay, despite the headwinds that we see in 2022, they are still fundamentally sound to stay within this range. Okay, I'll move into this at the later slide. Okay, so okay, just now I explained already why SGX. So again, two angles. One, they are very fundamentally strong and defensive. Okay, as you can see right here, right, whenever they go up, okay, they go up, is because that happens when the macro environment was not good. Okay, these are the pandemic years. This is the outbreak of the pandemic, and when they come down, it's always a company specific news. Okay, it's have nothing to do with the outside economy. And now that all these company specific news are these non-renewal of contract with MSCI, it's already water under the bridge already. Okay, so we have seen them being consolidated at this level. Okay, they also never drop further already because all these are already gone. Okay, so they are very defensive against macro event. Okay, and they have also a very strong business foundation. Okay, just like I mentioned, right, they actually recovered from this setback by quite a very big magnitude. Okay, mainly because they acquired these two companies, which also start to contribute. By the way, these two companies have already started to contribute in the latest quarterly earning. Okay, so one of them is called BitFX, is a leading cloud-based provider for electronic FX solutions. Okay, the other is actually a smart beta index firm, okay, that specializes in multi and single factor investment strategy. Okay, so these are two reasons why we can look at SGX even when you know, when the market is not so good, the macro environment is not so good. Okay, we still have these two to support the share price. Okay, and one thing I want to point out is that they have also a very strong dividend payout. Okay, look at this, 2019 to 2022. This is the amount that they have been paying out since 2019. Okay, before the pandemic, okay, they paid about four times a year. Each quarter they give about 7.5 cents. Okay, so in 2019 they give about 3 cents. Okay, 2020, right, when all companies are making losses, some don't even have dividend, they are actually still maintaining their dividend payout. Despite the non-renewal of contract with MSCI, they have also continued their consistent payout. Okay, even in 2021, 2022, the payout is very consistent. So while the SGX is still moving sideways, okay, while you are still positioning yourself in this stock, you at least you know that you are getting something back. You see, and it's a very stable recurring income, so to speak, in sense. Okay, so this is something that you guys may want to take note. Okay, and talking about potential catalyst, right? This is something that you guys may want to take note of with regards to SGX. Okay, so actually, right, back in 2020 during Donald Trump era, okay, SGX has already signed up an agreement with NASDAQ to cooperate in regards to regulatory and with both sides of company assessing each other in terms of funding. Okay, but at that point in time, it's COVID-19 period, So the impact, the effect is not so big. The effect is not so big. It's only that this year, right? In July, about 2 months back, okay, it was announced that SGX actually joined hands with New York Stock Exchange, okay, for company dual listing and ETF. Okay, this is, in my opinion, a very big thing, okay, and a very big potential catalyst going forward. Why is that so? Okay, so you see, what happened is that, about 1-2 years back, or even 3-4 years back, everyone was saying, oh, US market, there is Microsoft, there is Facebook, there's Google, there's Apple. So every company, even our local company, also want to list there. Okay, and among them, right, we have 3 Singapore companies that's currently listing in US. Okay, one is C Limited, which I have mentioned very early in this webinar. So they are actually the owner of Garena. For those gamers, Garena will not sound too foreign to you. And they are also the owner of Shopee. Okay, so if you do online shopping, you would have known about this Shopee. Okay, so they are actually the first, I would say, among the first few to list in US. Okay, subsequently, right, late last year, Grab and Property Guru also went on to list in US via a SPAC. Okay, so Grab is actually a Singapore company, but they actually start out in Malaysia lah. Okay, so they start out with this app called My Taxi app, okay, which become Grab Taxi. Then subsequently they branch out to Singapore, then to Southeast Asia, to Thailand, to Vietnam, to Indonesia. Okay, so Grab. Okay, another one is Property Guru. For those who have been doing house hunting, would know Property Guru is the go-to website. They have Property Guru Singapore, Property Guru Malaysia. So these 2 companies are very prominent in Southeast Asia, in our region. Okay, but look at what have happened after they have listed in US. Okay, you just take any of these, at any point of these, you can see that they have all been dropping. Okay, in fact, for Grab and Property Guru, right, the first day of their listing is actually the highest point already. Since then, they've been dropping and dropping and dropping and dropping. Okay, of course, economy no good, price drop is common. Okay, but there may be also other factors, like for example, while Grab is very big in this region, right, they may be very foreign to US people. Okay, just like Uber. We have no Uber here, but Uber is very big in US. Okay, so things like that lah. So there is a with this agreement, with this collaboration with this New York Stock Exchange, right, and SGX, right, there is a potential catalyst. There is a possibility that this company may want to come back to list in Singapore. Okay, and with this cooperation between SGX and New York Stock Exchange, it will make them easier to come back to list. Okay, so this is one potential catalyst to look out for. Okay, the second potential catalyst to look out for is actually SGX being a potential beneficiary of the heightened geopolitical tension between US and China. Okay, so what happened was that actually again, back to Donald Trump. Okay, during Donald Trump actually has do quite a lot of aggressive things towards China. Okay, so during his term, right, he actually US Congress actually passed a bill that allowed the US government to delist Chinese company that is listed in US if they do not adhere to the auditing standard. Okay, but at that time, it was not so severe because, as you all know, like Trump is very good at talking, so you know how to pull President Xi Jinping. Okay, so at that point in time, nothing happened, or rather, not much happened. But fast forward to this year, right? Trump is no longer around. Now we have Biden as the president of the United States of America. Okay, and what happened was that bill, right, actually start to take impact in this year. Okay, so just about a month ago, we already see some China state-owned company, very big company, they listed from US. Okay, among them, PetroChina, Sinopec, China Life. Okay, if these companies are very foreign to you, maybe this will ring a bell. Alibaba. So Alibaba is still trading there. Okay, but they are already in a watch list already. Okay, together with Yum China, Beijing, Weibo, and JD.com lah. Okay, so they are at risk to be delisted there. And what have this got to do with SGX? Okay, so what happened is that they may either continue to go back to China to list, or they can also seek a listing in Singapore. Okay, actually, we already have a very good example, NIO. Okay, NIO is a China EV maker that is already trading in Singapore already. I think about 3 or 4 months back. Okay, and the performance in Singapore is not too bad, not too bad. There are still a decent volume, decent interest in the counter. Okay, so there's a possibility that this company may come to SGX to list, and when they do that, right, I believe SGX will become a more vibrant place to be at lah. Okay, so looking at the financials, right, same like Singtel, nothing fantastic. Okay, you can see that they are very stable. Okay, revenue up 4%, net profit up 2%. Okay, or 1% before adjust. So there's nothing to crow about. 8 cents. Okay, I mentioned just now, very stable. Okay, so this one is actually a zooming chart of the chart that I showed earlier. So this is the consolidation part. Okay, where they have been consolidating since 2022. Okay, and I think this stock is a very good opportunity for us to position ourselves for a potential rebound when the market recovers. Because now what headwind do we have? We have rate hikes, we have inflation. Okay, but rate high inflation has been around since the earlier part of the year, and every time they drop, they only drop here. Okay, even STI has become a year-to-date loss, but SGX is still holding up very well. Okay, so this is one stock that where we can look to position ourselves for future lah. This is one thing to do. One stock to look at. Okay. Okay, I think I need to go a bit faster because you are running quite out of time. Okay, so the third company that I want to share is actually Keppel Corp. Okay, Keppel Corp have a very long history. Okay, so back in even the 60s or the 50s, right? Singapore is known to be a shipping village. Okay, so we depend, that time we were a developing country, so we depend a lot on trades. Okay, so Keppel actually began their humble beginning from being a local shipyard. Okay, and they have been, after that they have been progressing to other areas to become a conglomerate. Okay, conglomerate means that they are involved in a lot of companies, but all this history are not so important, and I will tell you why. Okay, so back in 2020 again. Okay, although Singtel also have Singtel and SGX, they have strategic, they have made a strategic direction for the company to go forward. Keppel is the same. Okay, so back in 2020, they have actually come out with this Vision 2030. So there are a few KPI that they want to hit by 2030. That's why they call it Vision 2030. Okay, so they want to concentrate their business into 4 key business areas. Okay, they don't want to depend on the old industry, you know, like shipyard, like the O&M, where you have to depend on the oil price. If oil price goes up, your share price goes up. If oil price go down, then your share price go down, kind of thing. Okay, so they want to pivot, they want to evolve. Okay, they want to evolve,脱胎换骨, so to speak in Chinese. Okay, so they want to evolve themselves into 4 key business areas. Okay, number 1, energy and environment. Number 2, urban development. Number 3, connectivity. And number 4, of course, asset management, with Singapore being a financial hub lah. Okay, so they also aim to create more substantiability. That means recurring income and more synergies within their group. Okay, they also want to adopt a more asset-like model. Okay, they don't want to have too many assets that are idling here and there and not doing much. Okay, in fact, they also have they also want to focus on these renewables and ESG goals. Now renewables, ESG is very hot. Okay, almost every country is talking about 环保, renewables. Okay, about economic, social, governance kind of thing. Okay, so I need you guys to keep in mind these takeaway that I've shown here, because whatever I'm going to show later will always come back to this. Okay, so why Keppel? Same. Okay, they are fundamentally strong because they are conglomerate. Okay, they have a well-diversified business. As I mentioned just now, okay, they have 4 key business areas. Okay, which is why I said the history is not so important, because they are now trying to evolve themselves, and they have already in the midst of doing it. Okay, so we will have they will still have this energy and environment sector, you know, the offshore marine, the renewables, the new energy. Okay, but later I'll show you that they are actually diversing this already. Okay, so with this gone, will only be the renewables and energy in this business area. Okay, of course, we also have property. Okay, Keppel Land, 100% owned. Okay, and we also have the telecommunication, the data center, you know, and you know, now it's all digital now. So data center is also part of their one of their key business area that they're looking at. Oh, by the way, the third largest telco, right, M1, is also fully owned by Keppel. Okay, and with Singapore being a financial hub, right, they are also in asset management. Okay, so they hold a substantial stake in REITs like Keppel REIT and Keppel DC REIT. Okay, and a very small stake in this US REIT called Keppel Pacific Op REIT. Okay, so these are the very forward-looking, very well diversified business that Keppel is having now. Okay, and the second thing that we want to look at is that they have very strong fundamentals. Okay, this is the latest result that they have issued. Okay, the first half 2022. You can see that Keppel is a bit different from SGX and Singtel. Singtel and SGX, while the result is only decent, Keppel Corp is actually very good. Okay, the net profit actually rise as much as 66% year on year. Okay, and they also have seen a strong recurring income growth. Remember their vision 2030. Okay, so some key take away here. Okay, so they are actually looking, they have actually divest Keppel Logistics, okay, a non-core business, and they are in the midst of diversing their Keppel O&M, the offshore and marine, okay, to form a new company with Sembawang Corp Marine. Okay, and this thing, right, will be very big. Okay, because the amount that we're talking about is very significant. Okay, it's supposed to realize about 9.42 billion in value from this divestment of this Keppel O&M. Okay, and if you translate to a per share value, right, it's actually equivalent to about $5.32 per share value, and Keppel Corp share price is only about $7. Okay, so you can see that how big this divestment is. Okay, but more on that later. Okay, so this is the CEO words, not my words. Okay, so these are very exciting time for Keppel as we prepare for a new phase in the company growth journey. Okay, so with the O&M transaction completed, this new Keppel will be very different from what we were before, which means that just now I said the history is actually not so important because they are already evolving. Okay, the new Keppel is very different from the old Keppel. Okay, they are going to pivot themselves towards renewable energy, decarbonization, you know. So now in the CEO words, Keppel is actually in the right place at the right time. Okay, so they are doing very well, moving towards their vision 2030. Okay, and they are also having a very strong dividend payout. Okay, their payout may not be as consistent as SGX. Okay, but considering that we see pandemic in 2020 and 2021, okay, they are still paying out 15 cents, 19 cents out of a $5 stock at that point in time. Okay, at that point in time, which that translates to quite a good yield, I would say. Okay, so before that, right, before the pandemic, they have been giving out 39 cents, 33 cents. Now that we are coming out of the pandemic, they are actually giving more than what they have been giving out before the pandemic, 36 cents. Okay, so as I mentioned on SGX as well, so while you are positioning yourself in this stock, okay, waiting for them to rebound, even if the market is not very good, you stand to get some dividend also lah. Okay, so now coming back to this potential catalyst. So just like I mentioned, right, they have already divested Keppel Logistics. Okay, Keppel Logistics is a non-core asset, non-core business. Okay, so they are going to do a capital recycling of them. Okay, get rid of this business and put it into more forward-looking business, which I will come to that later. Okay, this is the huge one. Okay, the investment of Keppel O&M is in the midst already. It's going to be completed soon. Okay, if this is completed, if this is completed, we could probably see a 9.42 billion realization in value, okay, and this will help capital to evolve themselves to put into the market even more, okay. After divestment, right, of course, when you do capital recycling, you need to invest, okay, you need to invest in something. So just this year alone, right, you can see that they have actually invested in these a lot of this renewable business, okay. In July, 2 months ago, they actually made their first purchase in Europe, okay, on these European onshore wind energy portfolio, okay. This is poised to not only to pivot them into these renewables, it also act as a recurring income tools for them, okay. And in 8th of August, right, they also expand into South Korea, okay, with a joint acquisition on leading waste management service player, okay. Waste service means 倒垃圾 lah, okay. And from the media release, right, this also pivot towards environmental business and also aim to strengthen their recurring income, okay, so that even when the market tank, right, they still have the recurring income to sustain them, okay. And last but not least, just about a month ago, they actually acquired another waste management company in Singapore, 800 Super. 800 Super is actually a listed company before, I think a few years ago, but they got delisted. Okay, so now Keppel has actually acquired a major stake in them and is poised to also pivot them towards environmental business and also recurring income. So key takeaway, they're out of this with these three acquisition, they poised to have more recurring income. Okay, and they are also defensive in nature because倒垃圾嘛, waste management and infrastructure. So even when the economy is no good, they are likely to stay afloat because they are very defensive. They are recession defensive, so to speak. Okay, so looking at the chart of Keppel Corp, right? If you notice, it's very, very different from Singtel SGX. Okay, before 2020, they have always been trading in the range. Okay, and at the turn of the year, suddenly they just boom, just go up. Okay, that's because of a lot of divestment and the new acquisition that I've just shown you. Okay, so they have been moving. So with every pullback, right? Sorry. So with every pullback, right, we see another surge up. Okay, it wasn't until the last few days where we see they drop out of these uptrend line. Okay, but they're still within this consolidation. Okay, but today, right, this is updated a few hours ago. Today, they actually briefly went back up before coming down again. Okay, same like the previous two chart. I think this one counter that I will need to position myself. Okay, for future rebound. Why? Because I can see that with all these news-driven event going on, right, even if things were to worsen, I think it should be around this region. So this region will be a very good level to look to position ourselves for future rebound. Okay. I'm sorry guys, because time is running out. I think I have to give this investment strategy a miss. Okay, maybe we can have it on another webinar. Okay, that will be up to investing mode. Okay, so I will just jump straight back to the I'll just jump straight back to the closing, to the conclusion. Okay, so okay, now that I've shared some of the insight on this Singapore market and some of the potential stocks you can look at to position yourself for a rebound. Okay, you might have some question. Okay, if I want to open a POEM account, a trading account in Singapore, why should I do that? Why can't I trade in Malaysia? I can use a Malaysia trading account to trade Singapore share. Okay, why should I open a POEM account in Singapore? Okay, and if I want to open an account in Singapore, what are the type of account that POEMs offer? Okay, POEM is actually the platform, the online platform for Phillip Securities okay, which I'm working at. Okay, so if I'm interested, how should I go about it? Okay, so because there's time constraint, let me just go through it very briefly. Okay, advantage of opening a trading account in Singapore. Cheaper brokerage commission. Well, this one I can't say for sure. I tried to search up the web. I couldn't find what is the rate that the Malaysian trading brokerage is charging you. So for this, you may have to, this for you to tell me lah, not for me to tell, because I don't know what's the rate in Malaysia. Okay. Then another advantage of opening a bullion trading account in Singapore is that funds in Phillip Security are protected. Okay, so all your funds here, right, is in a trust account. So which means that if Phillip go bust, right, your fund will still be there. Okay, then a bullion trading account, right, we also have multi-currency facilities, which means that your account, the account here can hold a lot of currency, Sing dollar, ringgit, US dollar, Hong Kong dollar, Japanese yen, okay, or Aussie dollar. So what most of the currency we also hold, we also carry, okay. And we also have these smart park facilities, whereby let's say if you have $100 in the account or $1,000 in account, we will put it into money market fund to help you earn a decent return, not much, but just a decent return while you're waiting for opportunity to buy shares. Okay, more on this, you can go to this website, www.polyons.com.sg/smartpark. Okay, and another advantage of opening a trading account in Singapore is because of this close connection between Singapore and Malaysia, right? Fund transfer actually is quite easy between Singapore and Malaysia. Okay, and I will explain more on that later. Okay, so I think this is very similar to that in Malaysia. Okay, so type of account that's available in Phillip Security in POEMS is two types, broadly categorized into two types. One is a CDP link, one is a custody account. CDP stands for Central Depository. The Central Depository is something like the CDS in Malaysia. Okay, so whatever share that you bought, right, will be under your own name. Okay, dividends and corporate action is all handled by CDP free of charge. Okay, so when you buy a share using a CDP link account, the share will not come to me, will not come to Phillip. It will be put under your own name in these CDP. Okay, and the brokerage is quite standard in is 0.28% or minimum $35 for a single contract that's less than 50K Sing dollar, and 0.22 for 50 to 100K, and 0.18% for a single contract that's more than 100K. Okay, so if the other type of account is actually a custody account where the share is being custodized in Phillip Security. So we have broadly three type of account: prepaid account, margin account, and cash price account. Okay, so briefly, prepaid account means you put in 100, you buy 100. You put in 1,000, you can buy up to 1,000. Margin account means that you are using the margin facilities in Phillip Security. It will be on a lower financing rate, about 3.8%. Okay, cash price account is actually a low cost account. They offer you the lowest brokerage. Okay, so it's actually a hybrid between prepaid and margin. Okay, so although they charge lower brokerage, right, there's one thing that you need to know is that share is actually being kept under Phillip nominee in Phillip Security, under Phillip nominee. So all the dividend and corporate action is handled by Phillip Securities, and there might be certain fee that might apply. Okay, so you know, there's no two goods lah. Okay, there's always something lah. So you can enjoy a lower brokerage, but when it comes to corporate action, there may be some fee that may apply. Okay, so how do I go about opening a CBP account? Okay, to open a CDP account, you can actually go to, you can actually open a CDP online. Okay, you don't really need to come down. Okay, but the thing is that you need a Singapore bank account. A Singapore bank account is required. Okay, so you may ask, hey, I'm staying in Malaysia. Okay, maybe I'm staying in KL. I can't possibly just go to Singapore to open a bank account. And even if I want to open a bank account, I may not be able to do so, because in Singapore, right, to open a bank account, you must either be you must either have a student pass or employer pass, okay, or some relevant document. Okay, so how do I open a CBP account with a Singapore bank account? Okay, so I go and Google, okay, and this is what I found out. Okay, so if you want to open a Singapore bank account online, you can actually do so. So if you are a Maybank Malaysia customer, you can actually open a Malaysia Maybank Singapore bank account. Okay, but I cannot speak for them lah, because I work for Phillip Security. I don't work for Maybank ma. Okay, but you can actually go to this website. Okay, maybank2u.com.sg / personal cross border. This website here lah. Okay, for those of you who are interested, you may want to take a photo, take a screenshot here first. Okay, but remember, all queries have to be directed to Maybank because this is more like a value-added service that I go and find out for you guys lah. But actually, I'm not in charge lah. Okay, so with this, right, you can actually also after whether you want to open a CDP account or a custody account, okay, as long as you want to open a bullion trading account, you can actually go to this website, okay, or you can scan the QR code here, okay. Remember in the application, you must put my code VZ so that the application will come to me and I can follow up with you. Okay, for Malaysian, right? These are the things that you may need. Okay, a IC, a bank account, either a Singapore bank account or TT detail. Okay, if your Malay address is different, we may need some supporting document. Okay, so all supporting must be English. Otherwise, there will be a need for this document to be translated lah. Okay, so that will come to the end of my presentation here on this webinar. I think I outrun a bit. Okay, so you can contact, these are all my contact. So if you all got any query, you can contact me or just scan this QR code to add my contact into your phone list. Okay, so Q&A. Is there any question that I can address now if I still have time? Do I still have time, Bernard?
Yeah, can. I think we have a question and Q&A tab there.
Okay. Let me see. How will the upcoming, by Lily, how will the upcoming Fed interest rate hike impact the three stock proposed? Are these three companies highly geared? Okay, first of all, interest rate hike is very real, okay, and we can actually see from the price movement that the impact is surely there. Okay, as I mentioned right at the start, right, in a bear market, we cannot expect uptrending chart. Okay, but most importantly, these three companies, right, if you take a look, right, let me just quickly pull out the chart. Like for example, for Singtel, right, you can see that they are actually well supported around this region. Okay, and year to date, right, even with rate hikes and things, 0.25, 0.75, 0.75, and 0.75, Singtel is still way above this lah. Okay, and as for these SGX, right, same 2022, we see so many rate hikes already. They are still trading here. Okay, they are still trading here, so they are very resilient. Okay, I'm not saying that they will not break the support lah, but I'm just saying that these two are highly likely to hold the support lah. Of course, anything can happen because I don't have a crystal ball. I cannot, predict the future. But based on past price data, we can see that they are highly resilient. Okay, and the last one would be these SGX, right? Yeah, the last SGX. Yeah, I just went through SGX. The last one will be Capricorn. Let me take a look at Capricorn. Okay, so Capricorn, okay, if you say that rate hike is going to have an impact, which it already show here, okay, you can see that they have already fallen out of this uptrend line already, but there's still a support here. But even at this support, right, if you compare to the year to date in 2022, they are still better off. Okay, and again, I'm not saying that they will not break this support, but I'm just saying that it's very well supported here lah. Okay, so I hope that will answer your question. Okay. Can you please give a quick sharing of the investment strategy under this volatile market environment? Well, okay. If it's okay, Bernard, let me take 5 minutes to just briefly go through this investment strategy.
Yeah, sure.
Okay, so what happened is that in Singapore, right, we have this we have this strategy called yield investing. Okay, yield investing. A lot of people think that when we go into the stock market, right, we buy low, sell high, and we make money from there. Okay, well, that is a strategy. There's actually another strategy called yield investment. Okay, to put it in a very loose way, right, you can think of it as a fixed D. Okay, so you buy into a share. Okay, hopefully that share will give you a yearly return, a very consistent and stable yearly return of about 4 to 5% or even higher. So that is called yield investment. Okay, of course the share price will move up and down lah, that's for sure. Okay, but what we are doing is that we are trying to look out for some shares where the price movement is very small, okay, and hopefully we go in at a right price and we just hold for long term, and every year we just collect the dividend, akin to just now what we have talked about SGX and Singtel and these are Capricorn. But there's a difference here in the sense that because we are not looking at a potential rebound, we are actually a rebound would be good, okay, because you'll make more capital appreciation, okay. But the main aim of you investing is actually trying to create a very strong recurring income. So every year, let's say for example, you buy a stock for $10,000, okay. So hopefully every year you will get a 5% return on it, okay. For example, like 500 a year kind of thing, okay. And the value of this 10K, hopefully they may go up and come down, but hopefully they will still stay around the same place in a very long term and or even the midterm. If they go up to a high level, you can always sell it, okay, and look for other companies that have a better yield, okay. And this one I want to point out is REITs, okay. I want to share with you this thing is that REITs for the past 1 week, right, past 1-2 weeks, REITs have been dropping like crazy, okay. Why? Okay, because basically, right, REITs have two things, okay. Number one, they are very poor, okay. Why? Because for REITs, is by law they have to pay out 90% of the profit to unit shareholder, okay. This is by law. So if they make 1 million, they have to pay out 900K to all the unit holder, okay. That is law number one. Law number two, okay, regulation number two is that they cannot have a gearing ratio that is more than 50%, okay. So they have to maintain a gearing ratio that's less than 50%. In general, right, broadly speaking, most of the REITs are having a gearing ratio less than 40% now, okay, at this point in time, okay. So these are the very two outstanding characteristic of REITs. But REITs, these 2 weeks, right, these 3 weeks, right, have been dropping like crazy. Why? Because of the rate hike. Because when the interest rate goes higher, right, their bank loan, the bank loan will also have higher interest rate. Okay, so there is a concern that they might their cost will increase. Okay, because now they are going to pay for higher risk, higher interest. Okay, but do take note that most of the REIT they have a rate we call a interest rate hedge. Okay, so just like you take up a home loan like that. Okay, when you take out a home loan, you can take a fixed rate for maybe 2 or 3 years. Okay, same for REITs lah. So when they want to do a refinancing, right, they will usually take a fixed 2-year and 3-year. So this high interest rate environment, right, will hurt those REIT that have a very short rate hedge. Okay, so this is something to look out for, and that is why the price has been dropping and dropping and dropping. So you may be asking, if they are so bad, why do you still recommend? Okay, why do you still think that it's a good strategy to buy REITs? Okay, 2 things. Number one, we buy things when there is a sale, right? Okay, we don't buy expensive things. Our aim is to buy as cheap as possible, okay, in the hope of making money, okay. So we only buy things when there's a sale, not when there is when the price is high. Okay, so that's factor number one. Factor number two, actually just now in one of my slides, right, I actually mentioned that okay, the REITs that we are going to look at, right, have to be fundamentally very strong. Okay, remember just now I showed you the slide on the SDI component, right? The 30 stocks. Out of it, 7 are REITs. Out of these 7 REITs, most of them are actually either government linked or they have very strong sponsor. Okay, the Mapletree Pan Asian Commercial REIT, the Mapletree Logistic, the Capital Land Integrated Com, you know, all these are actually have sponsored their government link. Okay, so when you talk about, you know, high interest rate, funding issue, default, all these things, I think the worry is not so big lah, because you know Singapore government always coming to rescue them if they are in trouble, they are ever in trouble. Okay, so the first criteria in this you investing using REITs, right, is that the REITs must be very fundamentally strong. Okay, they must be either have strong sponsor or they must be government linked. Okay, they must be reputable and you can see one. Like I believe in Malaysia, there is a CapitaLand Malaysia. There are some CapitaLand Malaysia mall. Okay, so the same thing in Singapore, right? We also see a lot of CapitaLand mall around. Almost every suburbs shopping mall are all under CapitaLand. Okay, so these are the things that you can take a look. And take note that for you investing, right, is actually to go for the long term. Okay, so hopefully when you buy, right, the every year you will get a consistent return. And if I may, right, I actually have did some case study here. So I really hope that it will help you. Okay, let's look at this case study, Keppel Infrastructure Trust. This is actually, if you remember, this Keppel Infrastructure is under Keppel Corp. Okay, if you remember, and Keppel Corp is the Marsiling link. Okay, so you see, let's say this is the chart from 2018 all the way to now. Okay, so it spent about 5 years with the pandemic here. Okay, let's say if you buy at somewhere at the high before the pandemic, even if you were to buy at high okay, at about 50%. Okay, if you were to hold it during even hold it throughout the pandemic, right? At the end of the day, you see that the price will still come back to the same. Okay, and in return for this, right, you will actually every year you'll be getting all these dividends. 3.7 cent, 3.7 cent, 2.8 cent, 3.8 cent, 3.8 cent. Okay, and in total, right, I add up already, it's actually 17.7 cent. So 17.7 cent out of a 50% share, we are actually talking about 20%, 30%. Yeah, so about 20% return here. Okay, and I'm actually taking the example that you're buying at a high. Okay, so if you were to buy at any point here, right? Okay, at any point here, in return for other than this dividend that you'll be getting, you will also be making the capital gain here. Okay, so this is one of the case study that I have drawn up for you guys lah. Hopefully, that is helpful in this this investment strategy that I want to share. But actually, there are more information, but this is just the so-called the nutshell. Hopefully, I answer your question here. Yep. Okay.
All right. Okay. All right. Thanks, Dan, for the reply. Yeah. So I think we have an audience here asking whether they can have your presentation slides.
I think, yeah, shouldn't be a problem. Shouldn't be a problem. No problem. I will just send you maybe how do you want to
Or
do it?
maybe for Peter, you can connect with Dan. Then you are able to send
Yeah,
the slides now.
sure. You Peter, you can always contact PM me either through investing note. Investing note actually there's a PM function. Okay.
Yes.
Not,
Or you
you can
can
just
join
contact.
the yeah,
Yes.
you join the Telegram group. Yeah, I think Dan is
Yes.
inside as well.
Yes, Bernard, that's a very good suggestion. So I will urge you all to join this Stock Buddy Telegram group. I'll post my slide there, a link there, so you all can look at this slide also lah. Okay.
Okay. Yep. I'll power up the QR code later. All right. So okay, let me share my screen. Do a quick.
Okay, let me just stop
ending.
sharing first.
Okay.
Okay. Yep.
Okay. All right. So thank you, Dan, for the insightful sharing. So we have prepared some of this material here. So definitely you can refer to Dan. And let's say if you have your own broker that you want to invest in Singapore market, you have prepared some of these QR code where you can scan. So let's say if you are investing in some local broker and you would like to get more information about investing in Singapore market, you can scan on the QR code in front of your screen. Okay, I'll give you 3 seconds.
Sorry, Bernard. If I may add, for this PhillipCapital, right? You guys can actually contact me if you all want to open an account here, because if you scan the QR code here, they will assign you a random broker, which which you might click or might not click lah. Okay, so at least I'm here speaking to you, so I'm verified. So if you think I'm a good fit, then you may want to contact me lah. Thanks for that.
Okay, thanks, Dan. Yeah, definitely you guys can always refer with Dan, can join the Telegram group, then can contact with Dan as well. Okay, so the other thing that I want to share with you guys is the Telegram group that we mentioned just now, the stock market buddies. So you can scan the QR code and enter into the group and start. You can discuss some of the stock market news and also some of the discussion that we have daily with Dan as well. And you can also always join us investing note. You can PM Dan and also can connect with Dan in investing. I believe Dan has every day get some market daily updates in the active traders group. So do join us in investing note, and you can be able to connect with other Singapore experienced investors as well. Okay. All right. So I'll give you 3 seconds to scan the stock market buddies the QR code. Okay. All right. So let's say if you guys miss out the QR code, you can always go back to our comment section where we have attached the link. You can click on it and join the group as well. Okay. So other than that, so one of the things that I want to share with guys, like what Dan just shared just now, NEO is also listed in SGX as well. So upcoming webinar, it will be in Mandarin webinar. So what we're going to share is about NEO. All right, so if you want to know more about NEO, do join us on the next session, which is on 13th of October, same time as well, 8 p.m. to 9:30. Okay, so stay tuned to our Invest News. Also stay tuned in our Facebook page to get to know more about our next webinar session. All right. Okay, so this is the end of our webinar today. So I would like to thank all of you, all the audiences, for joining us tonight, and also thanks Dan for sharing such an insightful sharing session with all of us. All right, so goodbye and have a wonderful evening.